So interest rates for home loans may still increase in 2023 as the Federal Reserve aims to constrain inflation, which could lead to higher long-term mortgage rates. However, some housing market experts believe that the mortgage rates may have already peaked due to encouraging news around inflation and a corresponding drop in the U.S. Treasury yields that set mortgage rates. Now, while the average 30-year fixed rate mortgage is still higher than it was, say, a year ago, mortgage rates have trended downward over the long term. Now, some experts predict that rates will stabilize or decline below 6% in 2023 as inflation slows down. Now, nevertheless, there may still continue to be financial volatility in the market as investors look for more clarity about the economy's direction. With borrowing costs remaining elevated and keeping housing affordability at the top of the list of challenges, Neda Nawab, who is Compass U.S. Region President, predicts that the sustained drop could push mortgage rates into the 5% range late in the second quarter or in the second half of 2023. But that's not guaranteed. Now, the Mortgage Bankers Association expects that 30-year mortgage rates will end 2023 at 5.2%, while Freddie Mac forecasts the average 30-year mortgage rates to start at 6.6% in quarter one of 2023 and end at 6.2% in quarter four of 2023. Now, Jaya Zhu, which is an economist for Realtor.com, believes that despite slowing inflation, the expected ongoing restrictive monetary policy may keep mortgage rates in the 6% to 7% range in the short term. Now, housing market experts are also keeping a watchful eye on the looming political battle over the debt ceiling, which hit its limit on January 19, 2023, forcing the U.S. Treasury to extend it to June 5th, 2023. Now, if Congress does not agree to raise the debt ceiling, the United States will be risking defaulting on its financial obligations, which would harm the economy and Americans. Now, Orfa Devalga, who is a senior macroeconomist at Zillow Home Loans, says that a looming debt limit standoff could push rates back up, thus hampering the already cold housing market. Now, the current rate environment may provide opportunities for borrowers to refinance, although applications remain stuck near the lowest level in more than 2 decades. However, homeowners should be careful about refinancing options, as not all of them yield less interest over the life of the loan. Now, Edward Seiler, an associate vice president at Mortgage Bankers Association, says that mortgage rates and home price growth should soften, which, along with cooling inflation, should help bring more prospective buyers into the market during the spring home buying season. Now, as George Retu of Realtor.com's Director of Economic Research notes, with interest rates, affordability, and housing supply still the key concerns, prospective buyers need to remain patient and focus on understanding their own finances and mortgage options. While experts are divided on what may happen with mortgage rates, what is important is for potential home buyers to remain informed about the housing market and how mortgage rates may affect their purchase. Now, as former Treasury Secretary Larry Summers once said, in the long run, mortgage rates are perhaps the most important variable in the economy. For more information, watch my other videos. Have a great day.